So, you've probably heard that investment bankers on Wall Street are all super rich and control the world. But what do they really do? Turns out it might not be what you think. It's not quite as sexy as it seems, and not all bankers are rich. In fact, one of the things that always surprises me is I'll meet with students that are interested in working in investment banking, and they have no clue what investment bankers actually do. They think that they make investments and that those investments perform really well and that they make lots of money. And that's not actually what happens in investment banking. In this video, you'll learn exactly what they do, how grueling the work can be, and the real reason thousands and thousands compete for jobs at places like Goldman Sachs, JP Morgan, and Morgan Stanley every year. Plus, stay to the end to get the tips that have helped hundreds of my students that have gone through my program land at some of the most exclusive investment banks in the world. What does an investment banker actually do? Do they invest in companies? Nope. They don't. Do they use complex financial models that require a PhD to analyze markets, find loopholes, and drive huge returns with high frequency trading? Nope. Do they pump and dump stocks on investors a la Wolf of Wall Street, if you've seen that movie? Nope, don't really do that either. Over the last 14 years, I've interviewed literally thousands of university students, excitedly telling me how much they want to work in investment banking. But when I ask them why or what they think investment bankers do, these are the kind of answers I hear, right? They are doing, complex financial trading, and they're investing in companies and helping those companies grow and all those things, which is not actually true. The truth is that investment bankers are kind of like realtors for businesses. At its core, an investment banker helps companies raise money. That's what they do. They do this by connecting companies with investors. Now, this could happen when a company needs growth capital in the form of debt, equity, or sometimes even both. It could happen when a company wants to sell all of its equity to someone else through a merger or an acquisition. It could be that a private equity firm wants to acquire a business and they need help finding sources of debt capital, and they might work with an investment bank to help them with that. As well as it might be, the founder of a company is deciding they want to sell the business, or maybe they want to take the company public and raise money from public investors. Just like in real estate, transactions often have bankers that advise each side. So if a company is selling to a private equity firm, for example, they may have an investment banker from, JP Morgan advising them on how to structure their business and what price to sell at and all of those types of things. And the buyer, the private equity firm, may be working with an investment banker that's also helping advise them on the acquisition. And the advantage is that you can kind of use the investment bankers to go head to head and negotiate on your behalf so that you can maintain a good relationship with the founder. Even when a company is going public, essentially what the investment bankers are doing is that they are helping that company raise money from public investors. They could be large money managers like Fidelity or Vanguard or others. Okay, so just like realtors, investment bankers really are just glorified salespeople, right? They sell equity and debt in companies just like realtors sell a house. But just like how a good realtor will analyze your house and help you accurately price it and present it, bankers do the exact same thing. Although evaluating and analyzing a company is typically way more challenging than evaluating a house. In the housing market, it's really easy. You can pull some quick comps. You just compare like number of bedrooms, number of baths, same basic area, same basic land size, same basic build quality, and boom, you're done, and you can get really close to what the right price should be for that house. Especially if like the house is in like, a cookie cutter neighborhood where most of the houses look the same. Businesses are a little more challenging because every business has its nuances. You have different people running the business. You have different business models. You have different products. You have different positioning in the market. You've got all of these different factors that make it hard to put a value on the business and be super confident in the same way that a realtor can. And this is the nuance of a great investment banker, is the ability to sell the company and get it a higher valuation than it would otherwise deserve. Or on the other hand, be able to push back, do the analysis on the business, and advise their clients to put in the right price so that they get a good deal on the investment and on the acquisition. So to do this, the investment bankers do a lot of analysis on the company. That's why a lot of investment bankers are kind of Excel jocks, right? They know how to build Excel models, forecasting revenues, diving into the underlying accounting of the company. They build pitch decks to pitch the company. and as well as pitching why investors should buy the company or why the company should consider being purchased by different acquirers, right? Or investors in the company. They are also on hand to help answer questions and guide founders through this process. Especially if you're a founder of a company and you want to sell your business, you may have only done this once, twice. Even if you're a serial entrepreneur and you've sold lots of businesses, that may only be 5 or 10 companies. Whereas investment bankers do hundreds of deals in their career, right? And buyers, typically private equity firms, they're buying 10, 20 deals every single fund. So investment bankers can be a critical part of advising clients, especially if they're raising money or if they are selling their company to get the best price possible and to put their best foot forward. Okay, so let's say after all of this, you still are excited about investment banking and you want to know what you're going to end up doing on a day-to-day basis. Most investment banking analysts start out with the preparation of materials. So they're preparing the pitch deck, they're doing some research, they're pulling in different data points. They may work in Excel and build some financial models and kind of manage that. Analysts will grind all day creating these pitch books and financial models to justify valuations while the managing directors are out on the golf course with the CEOs and investors working to consummate a deal. Investment banking can be a cutthroat industry. So keep that in mind. It's not necessarily that you're going out and closing huge deals and, being a mover and shaker in the industry. It could be that you're just reformatting a PowerPoint deck until 2 in the morning. So the work is not always glamorous, but the pay can be pretty high, and we'll talk about that. Investment banking is a cutthroat industry. If you don't land that client and you can't help them raise money, you don't get paid. And that's because just like realtors, you only get paid when a transaction goes through. It is not uncommon for analysts to work 100-hour weeks or more, pulling consecutive all-nighters, working to prepare materials in PowerPoint and Excel on deals that never end up getting done. Most people only last about 12 to 24 months in investment banking before switching to something else. And lastly, one of the big dirty secrets about investment banking is that just as most realtors are jealous of their clients with lots of money buying amazing homes or investment properties, most investment bankers would rather be on the buy side too, where they are the ones being courted by bankers to invest in the companies, because ultimately you can make a lot more money on that side in many cases. Not always. There are some investment bankers that make lots and lots of monies based on the fees that they're pulling from the deals that they close. Still sound like a super sexy career? Well, here's why thousands compete aggressively for those analyst jobs, in spite of the fact that a lot of the work may not be super glamorous. Just like realtors, bankers make a percentage fee on the amount of money they raise. But unlike realtors, raising $100 million for a company is far more common or likely than selling a $100 million house. And with a typical fee of 3%, bankers can make millions, right? In my example of raising $100 million, bankers would collect $3 million in fees. This trickles down to first-year analysts who can make $125,000 to $225,000 right out of college, which is quite a bit more than the average college student who makes somewhere around $40,000 to $50,000 at graduation. Investment banking is also, and perhaps this is the more important piece, seen as a rite of passage, and it opens a ton of doors for all kinds of different opportunities. It isn't uncommon for a first-year analyst to be hit up by tons of recruiters looking to place them in very lucrative careers in private equity, hedge funds, venture capital funds, and tech companies. It also often opens up doors to prestigious MBA programs that can further accelerate your career. If you look at the top 10 MBA programs, the Harvards, the Stanfords, the Whartons, etc., a high percentage of those MBA classes have experience in investment banking at some point in their career. And these attributes make investment banking highly sought after from some of the best and brightest in this country. Okay, still want to do investment banking? Great. Here are some of my top tips to help you get started that have helped hundreds of my students land jobs at all the top shops. First, use an investment banking resume template. See a link below in the comments. Keep your grades above a 3.5. Ideally, you want to be quite a bit higher, probably closer to above 3.8. If you're pursuing an engineering degree, you can have slightly lower grades than somebody that's just doing finance. Higher the better though. Look for any sort of high finance internship you can do. This could be interning at a private equity fund, a venture fund, working in a small regional investment bank or a hedge fund, doing whatever you can to get experience in high finance. That will help you for two reasons. One, it'll get you exposure to the world of private equity and high finance and investment banking to a certain extent. It will also be a positive signal to employers that you are somebody that's competent and that somebody else has said, hey, this person's worth hiring. Do your interview prep. There's a lot of great places where you can grab interview question lists, go through them, and be able to answer them correctly and know why you got to that answer. Being able to build a DCF or discounted cash flow model from the top to bottom can also be a huge help in being able to answer those questions. I've included a couple links in the comments of places you can go for lists of typical interview questions. Lastly, network. So assuming we're not social distancing still, you should be on a plane to New York, San Francisco, LA, etc., and taking coffee meetings with current investment bankers well before recruiting season. They need to know who you are and like you enough to put your name on the top of the stack. They will literally get books that are of thousands of resumes, and they will just go through them and use some simple algorithm to get rid of people, right? Like, oh, you have under a 3.7, you're out, right? But if they've met with you and they like you, they'll oftentimes take your resume, flag it, put it on the top of the stack, and make sure that you get an interview. Hit up the alumni from your school, get creative, look for any other angle you can get to meet with these people. You might be surprised how many are willing to grab a quick 15-minute coffee to get to know you, because they're also responsible for recruiting as well, and they also went through this exact same process. They're going to have a lot more respect for you if you've done the work and made the sacrifice to hop on a plane and go out and meet with them than those that just throw on their resume and cross their fingers and hope. Hopefully this was helpful for those of you that are excited about investment banking. If I turned you off or investment banking really wasn't your thing, check out my next video where we're going to talk about how to get into venture capital without any experience.